my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Last week I spoke extensively of a trio of weekly key reversals down formed 2 weeks ago in LME 3-month nickel, zinc and tin. The one in LME 3-month nickel offset the daily key reversal up on Thursday 3 weeks ago, and is why we saw prices early last week and late the week before down, with the flatlining medium moving average currently at 17,410 and a nearby short medium moving average at 17,485. That's why we saw them down there. To go into detail of the 2 weeks ago a little more, please bear with me on this, as it soon will become evident why I continue to discuss this. The actual weekly key reversal down 2 weeks ago itself, I suspect, was a result of the same overhang this market has had since the start of May. Prices have periodically risen up and slammed into the congestion from August 2014 between 18,400 and 19,070. Now, as I said last week on this, and I quote, "This doesn't take away from some of the underlying bullish factors we've seen since the big drop back in March." End of quote. So, underneath the market, we have the middle time currently at 16,975 of the big 2017 to 2018 shallow bullish shift pitchfork, plus the lower time currently 16,795 of the October 2020 to March 2021 bullish shift pitchfork, and in between these two, the slowly rising long moving average currently 16,850. I said last week, whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it is missing. Most recently this past week, we have seen prices rise and move into the 18,400 to 19,070 congestion, once again at a slightly higher level. Now, this can be well explained by the upper bullish trend line, currently 18,690, that has capped the market since May. If the market is to progress higher, then the congestion and this upper trend line will have to be dealt with. At this current rate, that will happen by the middle of August. The upper trend line will start peaking over the congestion. Now, one final point. Yesterday the market made a key reversal down. It's not a large key reversal, but it is one nevertheless, and it ties in with the market reaching towards the upper trend line and being slapped down again. However, the slap down this time has not extended that much into today, as we have seen prices dip but then move back up over last night's close, and around last night's close now, looking like an indecisive doji cross of all things. I suspect that this may be more akin to what happened at the beginning of June, just before that last weekly key reversal down, where prices dipped and then rallied, but they were always contained by that upper trend line. As I've mentioned earlier, until prices manage to push up and out and over 18,400 to 19,070 congestion zone, this will cap on any rises. LME 3-month zinc. As I already mentioned in my commentary on LME 3-month nickel earlier, I have spoken extensively about the main feature from 2 weeks ago, a trio of weekly key reversals in LME 3-month zinc, nickel and tin. In many ways, the action here in zinc was the most profound. You see, I'd written back when I made written commentaries, actually, back in November of last year, how the then bullish incentive was still alive. I wrote back then, and I quote, "While superficially the market may be topping and looking sideways to a potential move lower, the reality is that the bullish incentive is still alive, though at a less acute angle. It all depends on what the market will do with the big old 50% Fibonacci line at 2806, because there's a lot of support below and also resistance above." End of quote. Since then the market has, overall, moved higher, but after a period of hesitation since early May up until 2 weeks ago, prices then started to break down. They moved lower, down through the short medium moving average currently at 29.47, the big May 2020 today uptrend currently 29.20, and the medium moving average currently 28.83. Indeed, the only thing that stopped the market going low was the and I quote again, the big old 50% Fibonacci line at 2806, because there's a lot of support below and also resistance above, end of quote. It is interesting in all that move down that the key 50% Fibonacci level I pointed out back all those months ago in November last year at 2806 has proved to be the stopping ground for the big weekly key reversal move down, done 2 weeks ago. Then came last week, and prices recovered somewhat, back up over the medium moving average, the broken uptrend, and they are challenging the short medium moving average at the moment, from below this time. I posed a question last week of what's next. Well, the action since the big fall in March looks suspiciously, or did, like a bearish bump and run reversal top. It is not perfect, as the trend line for such a move will be down at 27.71, just above the slowly rising long moving average, currently at 27.49. Should make that a little bit higher than that, 27.61. However, it's not unusual for such a pattern to see some hesitation around this trendline area before seeing a strike for lower levels. This is what we'd seen last week and so far into this week. Hence, I was last week and also this week, I'm still minded to look upon favourably on this idea. My only concern or issue is if we see too far a recovery back up, say towards the 3000 level, in which case the opportunity exists for another pattern type. Meanwhile, I've still left targets X1 and X2 on a daily chart. These were, still are I suppose, the initial and full targets for the diamond continuation pattern formed over January to March. Well, the market already reached target X1 in the 30.95 area beforehand, and I had previously expressed doubts about the market having the impetus to reach target X2 in the 32.15 area. There's only one other thing I want to point out before I finish off. Well, two things actually. I was going to retire these two targets at the end of last week's commentary. I think I'll keep them on just in case. The other thing is, if we do suddenly turn around sharply, then this whole action from the last 3 weeks or so could be a bear flag. In which case we'll be looking for a close or a move down to under the bump and run reversal neckline and under the long moving average as well. Nothing started yet, but just keep an eye on that one. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.